Hey guys, it is May from Markets with May, and I have not done this in so long. It's so crazy. My settings are completely different, but it's a little bit later in the evening. We had a crazy election, but I wanted you guys to know that as much as I have been focusing on SoFi and all these other things on my Twitter, I have not forgotten my AMC people. Okay. I've not forgotten you. All right. So we will be talking about AMC's earnings tonight. Past performance is not indicative of future returns. And I do own the bonds and I own some stock right now. And I will probably find a spot to add to my position. But there were some really awkward things for sure in this quarter. Some of it was good, some of it was awkward. Obviously, the stock is down, so it must have been awkward enough where a lot of people are like, I don't know how to think about that. That's why, even more than anything, I was like, I have to get something out tonight to at least help people that really are going through this and are like, oh, know what to do. All right, let's get into it then. Oh, thank you, Coscos. I appreciate it. Okay, so I'm going to share my screen. And when I do this, I may not be able to see your comments, but I will come back shortly. I don't have that much stuff going on. All right. First and foremost, this is why some people are freaked out. Hopefully, you guys can see that okay. It's because the revenues were down 4%, and then you had earnings down 33 million into an L. And people were like, what was that all about? How did that happen? What happened? Okay. And if I were to sum it up in a nutshell, it really is Europe. Okay. Some people are like, well, because he had some commentary about movies playing in rural versus urban or what was going on, but it is really straightforward. It was Europe. Okay. And if you'll look at some of the past stuff I've done, I've talked about the fact that I really think it might not be a bad idea to sell Europe. I'm sorry. I know some of you guys are hanging out in Germany and all these cool countries that I wish I was in right now. But the fact is, if you look at this box, you can see really clearly that Europe doesn't make as much as the US does currently. And we're going to talk about why that is, okay? And whether or not that will ever happen to improve. If you go back through like all my past videos, I'll even shout out when Europe does a little better and starts to improve, but it's been very hit or miss, okay? I would say in very all the other macro stuff that I do, if you follow my Twitter account, you guys know that I do that stuff. Europe is hit or miss because basically Europe's had quite the last 2 years. I mean, they've just had a rough time of it for especially the last 2 years, but even COVID lockdown, et cetera. So, we're seeing it in the numbers for sure this quarter. But let's go through the rest of it. I just want to make sure that it's really clear. It's if you go through the release, so the 10Q came out at the same time as the release. And so it's kind of important to go through all of these. I want to show this to you. This is their table. And you can see revenue down 2.6% in the US, and it's down like 18% in the international markets. Some of this is currency, okay? So before you're like, oh my gosh, that is like bad. It's current. Some of it's currency, and there's some extra, let's call it, okay? But this is why I keep saying, you really got to really think about Europe. Now, also, some of it is that we have less theaters, okay? And you can kind of see that average screens down 2.5%. I'm going to show you the breakout in other spots. You can see it more clearly. Here again isn't, the same. I wanted to kind of split it up so you could see it. The same thing, the sheet that shows this also shows what the attendance numbers looked at like. Yeah, you definitely had less attendance in the US markets, but because of pricing and because you also didn't have that currency issue, this down 9% attendance wasn't as bad as this down 18% attendance in the international markets. You do have less screens. You can kind of see that. Yeah. But that does not account for, given this numbers of screens is not as like astronomical as this, that doesn't account for it. Okay, listen, we had Taylor Swift last year too. Okay, so it's a little bit not comparable. We knew it was going to be a little bit okay, but at the same time, the international business unambiguously was not great this quarter. Here again is part of the reason why every single quarter I'm like, what do we do with international? Okay. And it's because you can kind of see the difference in average ticket price. Every single quarter it looks like this. But this quarter, whereas the US got pricing, the international markets did not. And I'm actually and some of this is going to be FX. Again, those foreign currency things, they're fluctuating like crazy all the time. Consolidated, you can see the impact. Also, food prices went up. Okay, so unfortunately, they experienced what might feel like a little bit more inflation, or alternatively, they just spent more per person. Either way, we'll give you this number. And then so on and so forth down here, you can see how Europe, which is still a meaningful part of the business, right? Like most of this is a US company, and then we've got the international, but it still brings that raw number down. That's your issue. I almost feel like I sound like a weatherman tonight, a little bit. Okay, there's a couple more things I just want to point out. Here's the constant currency. They actually show you constant currency versus margin per contributor. So that's where they're trying to take out from this number, this 1104. They're trying to take out what is going on with currency, and you just had a little bit of a difference going on. Okay, so this will help you see it a little bit. Currency helped them, and yet it didn't help them enough. Okay, that's kind of how you interpret that. So that's, I think, what maybe if you're having difficulty finding what was the biggest problem this quarter, that was probably it. Let me there's a couple, I have a few more things prepared, but let me just look and make sure there's not some big time questions going on. One second. Cash drop 22. Yeah. Okay. Actually, I'm going to show that next. Great question, Sparky. Thank you for coming. Oh my goodness. Shoot. No one ever calls me at this hour. That's so crazy. Okay, May is a 50% down Cineworld, cutting prices temporarily. This was a shock. Yep. Nope. Tech we love. This is a solid comment right here. This may be part of what is going on. This was a shock, happened prior quarters. I didn't like it. Yeah. And that's part of kind of like, how do you think about the international business, given that it really does have a very different dynamic from the US business? Okay, we're going to come back to it. And Sparky in the comments talked about this cash situation. Let me go through it because actually, Sparky, I love that you're here. And if you've got comments on that, I'm going to show you what I saw in the balance sheet portion, which is extremely important these days, given what the deal is. Okay, next up, corporate borrowings. We have a $505 million reduction. And I wanted to show you this slide because you can very clearly see where it came from. Okay, it didn't come from all this other stuff. It came from what we knew. This you replaced the 6-8 pick toggle with you replaced the 10-12 with the 6-8. But look how much came out of this. So net between all of this is about $500,000. Okay, and these also little baby payoff. Okay, these aren't even a big deal. These aren't even 100. Like, together they're 120 million. This is not your issue ever, 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 ever. I happen to own these, so I am last in line as well. But these are like a big nothing. Okay, but what I want to show you, because you can't look at these in its own little silo. Whoops, this one. Okay, so this is what Sparky and I are watching very closely. But I want to show you, these were the big changes on the balance sheet. You have this 200 and change down on cash. Your receivables were halved. I don't love that, but I think that might just be the function of which theaters left and which theaters came in. And then I wanted to show you on the operating leases, this came down. Why did I want to show you that? Because actually you have kind of a ever so slightly bigger decrease in liabilities, which is a good thing technically, than you do on your assets side. So here, the 357, I'm going to say, went against the 504. So actually not as horrible as it might seem. And then you are seeing a decrease in operating lease liability. And I'm putting these two together so you can kind of see in comparison how that nets out to help some folks along. Couple more slides just to clarify. Free cash flow is negative this quarter. That sucks. I mean, it really does. We were hoping for maybe a little bit less negative than that. The company is saying that this is probably the end of this issue, but honestly, until the international gets more clarified as something on the go forward that is not doing what it currently is doing, that would be great. Then we would get a better sense for what's going on with free cash flow. why do we need free cash flow to happen? We need free cash flow, because free cash flow is what lets us start paying down debt. Okay. EBITDA helps us pay down debt. Free cash flow helps us. These are all the numbers that let us know that we have extra cash left over. There was also a lot of discussion about capital expenditure, and people are going to have very different opinions about it. And I just want you to see how crazy low the capex is. The capex is 60 million. It's crazy low. They are right now targeting between 200 and 250. And there was a lot of discussion about this AMC Go program that would be more capex only if EBITDA happens. I think it's a wait and see for me. It's a wait and see how all of this dynamic plays out. But it's something to keep in the back of your head. But this is crazy low. Just so you know, capex was like double that before 2019. And remember that even though capex was double that, there is a bunch of renovation that kind of has been on like autopilot. I mean, this is such a low number for maintenance capex. And remember, there's like inflation and stuff. Okay. Maintenance capex, again, is well, it's like somebody tore a seat, somebody did something really crazy. That has to be modified and improved. If not, growth capex, we replace that ugly chair with a leather seat. Okay. A couple of last things too. I just want to show you this. This is in page 65 of the 10Q. Some people have had a chance to go through the release. They have not had a chance to go through the Q. May would like a little more clarification on the Q. May did not ask a question. I don't know why I'm talking about myself in the third person, but that's what's going on right now. But on the call, we did not talk about this. I don't know why, but this is actually kind of relevant. It is neither, in my opinion, good or bad. It just is what it is. But since we know that Movico was separated and it was like this big, like, what? From the whole debt restructuring thing, we can now see what exactly is the value of Movico versus the rest of AMC. And the thing that really is striking is really this line item, this other expense. Okay. And I was like, are you doing some crazy stuff here that I don't know about that is sketchy? The answer is, I don't think it's sketchy, but I would like it clarified. This is what that other expense is. It's the derivative liability that's embedded in the 2030s. So they definitely split this out so that they could not create an issue as relates to this exchangeable note and what parts of the company that could be taken from that. Okay. So I would like a little more clarity, please. If somebody's watching and just knows the answer, that would be amazing. So that one was one. And then I just want you guys to remember when you're looking through cash flow, you got to really, with a company like AMC, you have to really look at what is actually causing the cash flow situation from quarter to quarter. You're going to have these one-off items. They are not reoccurring, et cetera, that either take away from cash or add to cash. And that's kind of what I have. Let me see if I've got any questions here. I keep hitting the wrong buttons. Hey, Grandpa Barney. Oh my gosh, how are you doing? Nice to see you. Let's see what we got here. Oh, thank you for the super chat. Trimming back my share count. Yeah, no, I know this one it's rough because as you guys know, I have the bonds and I said that at some point I would swap out the bonds for the stock. There is, is there a concern that he will dilute? I would say it's 50-50. If I had to lean towards 150, okay, so maybe 55-45, right? That he might do yet another dilution. I feel fortunate that I have so much of my ownership or exposure to AMC via the bonds, but I do own stock. And my intention was to buy more stock as the bonds were no more. And I'm actually getting to a point where I probably will go ahead and pitch them out because the 2025s are trading, I think, with like a 7%. If I sell them, if I buy them, it's 5%, but it's like 7%. So I'm trying to get a better offer on my bonds on my 2025s. Short of that, I'll just wait. But that's just something to note. It's 50-50. And I don't know the answer to that. And I think part of it is because the one thing I heard that might be on the good side of this that maybe other people didn't necessarily feel the same way, is that it was a good quarter in certain ways. It was a good quarter in the US. It was a weird quarter in international, is really how I'd say it. And I think tech, I want to give you full tech we love, full props, because that's why. Okay. Um, um, I am not 100% sure about the answer to this. Tech we love. Cineworld has been in court trying to prevent liquidation of their theaters. I don't know the answer to that. Possibly, not 100% sure. But a lot of this. Where did the 2 million drop? Okay, Krish, thanks for asking, but I'm not 100% sure what you mean. Can you clarify that for me? And let me try to get you an answer. Roaring Lion, giggling tonight. Hopefully not at me. But I hope you're doing well. Let's see, Sparky. Oh, Sparky has some color. 500 million cash would be fine if it were profitable, even a little. Yeah. Okay, so that is a fair point. Sparky's right, and Grandpa Barney, that may also give you a little bit more of a reason or a thought process if you hadn't already considered it. I agree. 500 million is weak. The only thing that I would be thinking otherwise, but it is kind of like aggressive to wait until last minute, Sparky. So I probably am more leaning towards you. The two things that I think at this time of year, number one, he didn't really give great guidance to the fourth quarter, and he didn't really talk about what the financing needs were in the fourth quarter. Instead, this AMC Go seemed more to me like, hey, if I ask for money, I want to actually upgrade the theaters. So that's really, I'll do a twofer. The second thing that makes me kind of like always a little bit question mark ish is we're close to year end, and year end is tax loss selling season. And for sure, the debt funds this year have tax loss selling needs. What do I mean by that? Since in some cases, parts of the balance sheet that AMC has would, be still a little bit underwater, not by a lot, but just remember the marks on some of the longer dated debt is such that he may do some funky financing at the end of the year, like he's given us as a Christmas present for the past 2 years. Hopefully the Christmas present isn't dilution for dilution's sake. Hopefully it's a tax loss selling negotiation of debt, but there is that as well. So it is a little bit hard to know for sure how to think about it. Hopefully that made sense. If it didn't, comment below. So my point is, here we are in November. Every single year, the man has tried to negotiate with the debt holders to try to get debt paid down at a lower cost than what he borrowed. So if he borrowed $100, he's going to try to pay it for 75, which he's done almost every year. And so if that's a thing, then this last month, as it has been for every single Christmas since I started looking at AMC, is going to be interesting. So keep that in mind. Let's see. He gets down to 600 million. He's going, yeah, Grandpa Barney, that is totally true. And so that's why I think you are not in the wrong for feeling that way. We got a little more color, approved despite landlord's challenge. Okay, yeah. The restructuring of this whole industry is still coming out of it. And then this guidance to whether Europe will be affected by the 15% down quarter. It seems like one-time experience, but that remains to be seen. Yeah, you know what? This has been a really, really weird. It's not, yes, the theaters for sure, rough time every day of the week. But Europe in general has been really strange for the last 2 years. I'm not even in Europe, but I think that that's true for almost every single company. And on top of it, tech we love, which a really good point is that currency is flipping back and forth like crazy on a given day for these currencies. So all of that is fairly important stuff to kind of keep an eye on. Let's see if I missed anyone else. Okay, I think we didn't miss anything else. Hopefully that is helpful to people that have not had a chance to look at it. I think my biggest thing is I still want to understand this movie co breakup stuff again, or the breakup on the sheet. Let me just actually go back to that for people that may have tuned in late. This is the one outstanding question that I think people just went through the earnings release and didn't have time to go through the Q, but the Q is out. It's this right here. I don't actually, for the record, think this is bad, wrong, flawed, tricky, sketchy, nothing. Okay. I just think it's none of that. All I'm saying is I'd like to understand the split up, because he's essentially split up about 20%, 20-ish percent of the company, 20, 15, something like that. something like that. Okay, like not all Asians are perfect at math. All right, so he's kind of chopped up the company in a particular way, and he stuck the other income, and that is like that number is 100% this thing, which is the fair value decrease of the conversion feature. Okay, and so 2 seconds on that, because I know some of you guys don't know what means embedded conversion feature in the exchangeable notes. Actually, let me get to that just so you guys can map it out if you're trying to understand it. Sorry, real quick. Okay, what means that? Let me actually go back to that. All right, so this 20 notes, the 2023s, okay? This is over here. It's this thing. So we sold this thing, the 26, and we went to this thing up here, this 414. And they have a pick toggle feature in them, and they're exchangeable for equity. And so they've got to kind of have that available, if is my understanding. Sparky, I know you know this cold, so just stick it in the notes if I've said it in some funky way. Okay. So they've got to have something ready to cover that in case the shareholders exchange the note. And the thing that they have is, so as that thing, and it's not in danger of being exchanged, is my guess, given how this would normally be written. But you still have to, from an accounting standpoint, record the fair value increase and decrease on a given quarter. And that's what this thing is, essentially. That's all that is. It's going to be a little funky. And it's sitting there affecting Movico more than it's affecting the rest of the business. And that's what that is. I want to understand it. I know Adam Aaron doesn't watch my stuff, but if someone else can get a note to him so he talks about it in the future, that would be really awesome. And that's all I got on there. Some people are giving up. Yeah, I totally appreciate it. This is not buy, sell. Everybody's got to do what's right for them and their finances and their family. And with that, good night, everybody. Take care and be kind to each other, because I know everybody's super sensitive after